What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein. Hey! Gulf South Mortgage Authority, and this is your home show where for 11 plus years, providing education and options on what is or will be your largest investment, most valuable asset, your home. If you're new to the show, welcome to the Gumbo Nation. Glad to have you here with us. Think you'll enjoy the show. For all those who recommend the Gumbo Nation, hey, it's growing, and I just want to thank you every single week because of you. Referring folks over, hey, can you help this person? I work with this person. My family needs this. Whether it's home buying, refinancing, reverse mortgages, construction, renovation, credit. If you can think of it, I have it. And that goes for loan programs and ways to get you in your house, everything having to do with your home. Think of me as your home wealth advisor. Home away from the show's mortgagegumbo.com. Go to YouTube, subscribe there if you want. Type in Mortgage Gumbo. There's no reason for you not to be educated. We provided 800-plus videos are out there, so make sure you go check it out. On the show today, going to be talking about, hey, for sellers, going to give you some insight on what homeowners want. What homeowners want. Options. You want them. You need them. When it comes to loan options, you got that low rate, but that debt's mounting. I'm going to give you the difference between fixed second and a HELOC. Everybody knows how I feel about, or if you're new to the show, you don't, but it's the devil in disguise. We're going to talk about what we're doing with our fixed second rate program. That's been amazing. Touched on this last week or the week before, blended rate. Going to explain that. Got quite a few calls on that. I want to break that down for you. So I'm going to explain that so you can understand when you're looking at all your debt, kind of how to work through what is the blended rate. And then if you got any questions, we'll get to those as well. But let's get started with the latest jobs data. And Gumbo Nation, it's strong, allegedly. You know, over the last week, we've had the JOLTS, which is the job openings and hire report. And it's up from 6.9 million to 7.2 million openings. So that means there's opportunities out there. That means people are hiring. In the private sector, this is what we want to see. Private jobs is up. According to ADP, we had 120,000 jobs versus 110,000. We'll get to BLS in a second. That's a trend that the last 90 days is rising. The Bureau of Labor and Statistics was expecting 85,000 jobs, and it came in yesterday at 172,000 jobs, more than double what the expectation is. Given a 3-month average of 188,000 jobs a month. So, is the market stronger? Is the job market up? So you've got hiring going on. You've got openings there. Stock market hitting all-time highs. So, I mean, is the Fed going to raise rates? Is the Fed going to lower rates? Well, the market's now moved from pricing in 2 to 3 rate cuts in 2026 to possibly pricing in a hike. Because now what they're looking at is they're looking at the labor market. And if companies are hiring, unemployment sitting at 4.3%, according to the household survey. Even though full-time jobs had a loss of 79,000, part-times had gains of 266. See, what I always look at is what are the continuing unemployment claims? And I agree. We all agree hiring is good, right? So then why are folks who've been on unemployment for 27 plus weeks at the highest since 2021 at 1.98 mil? The median weeks is at the highest since 2021. People staying on unemployment for 11.6 weeks. So what is it? Or those folks who are staying on unemployment, is it, and I think it's real. This is not, for many of us, this is not the unemployment you and I grew up on. You lost a job, you went to the labor office every week, you handed in how many jobs, how many interviews you went on, showed proof of that, and looked through a 13-inch monitor with green DOS and tried to find a job. Now you've got the gig economy, which is real. Your Uber drivers, your DoorDash, your Walmart delivery, grocery delivery. These are real things. So, I mean, I find it hard to believe that with these job openings and what we're seeing here, I don't think there's just a bunch of lazy people going, hey, I could survive on unemployment. So to circle back, what does that mean when it comes to the Fed? Well, now if the Fed how can they lower rates, Gumbo Nation, when all signs point to things are moving in the right direction? Right? It's hard. So, because a lot of what we're seeing with this inflation, it's war-driven right now, or whatever this is we have going on with Iran. So you've got oil prices up, and that's fluctuating depending on the headlines. But is it believed that that's for a short time? And once that gets resolved, oil prices will come down, inflation will come down, and then you've got people hiring. So how is the Fed to look and go, hey, we should lower the federal funds rate? And keep in mind, again, for those new joining, federal funds rate is not mortgage interest rates. Federal funds rate is, for those listening, here's a quiz. Is the federal funds rate short-term rates or long-term rates? That's right, short-term. This is your overnight fund. This is what banks lend to banks. This is where that money comes from. And there you've got private sector, and we talked about forever. Now you've got private sector that's hiring more than large. You hear about all these large companies, Google, Meta, whoever they are, laying all these folks off. So when you're looking at this jobs report and looking at it, that federal funds rate, how are they going to lower that? If people are hiring, spending's not subsiding. So where is that? What's the why? And I think it's going to be interesting because now the president's got his guy in there. But when you're looking at this overall, I mean, I don't think he's going to do it in his first meeting, but is it possible that they would raise rates on the federal funds rate? Now, if you want to try to find the bright side, a little bit of a shed some sunlight on something here. I mean, the Fed funds rate, look, that's a reason why your bank, I mean, if you remember, just to give you an idea for those who are joining or don't know, think about when the Fed's fund rate was at 0. Think about your money sitting in your bank account, your checking account and savings account. Remember the old proverbial air quotes, free checking? Banks, we offer free checking. You know why it was free? Because they couldn't make money off of your money, so they just wanted to have deposits. When the Fed rate's a little higher, they need that money, right? So now they can afford, because they're lending out at a higher amount, and there's a little margin built in. Now they want your deposits, and they can give you a little something back on it. And that's why you were seeing higher CDs and people taking advantage of that a few years back. I've still got a CD I did, a 3-year CD. It's coming up at the end of this year, the beginning of next year. That was like 5.5%. So the reason I bring this up is there's a lot out there. And when you're hearing these headlines, I like to make sure that you understand the whys. And you're like, nah, listen to Mortgage Gumbo. I'm part of the Gumbo Nation. Here's what's really going on. And I want you to understand the federal funds rate does not affect mortgage rates. What affects mortgage rates is inflation. And that's why since this war started, we've seen mortgage rates spike. Before that, they were going down. And they were going down without Jerome Powell lowering the federal funds rate. We talk about the margins, right? Well, margins are still tight. As much as the 10-year Treasury's gone up without the Fed doing anything, thank goodness rates aren't following suit, being back at 2 and 2.5% margins. We'd be back at 7.5% rates. Rates want to break out, but we need some things to happen. So I just want you to be aware of what is going on and the whys on this stuff, and that's why I wanted to talk about the jobs report. All right, don't go anywhere. On the other side of the break, still to come, we're going to be talking about, hey, a fixed second versus a HELOC. You've got this low first mortgage. You don't want to touch that rate. Well, we'll talk about what some options are. I'll take us into blended rates as well. And then sellers. Hey, if you need help selling your home, MortgageGumbo.com, reach out. We can help you. We're doing it right now. You've trusted us for 30 years to help you buy. Let me help you get your home listed and get top dollar as well. So sellers, we're going to be telling you what homeowners are looking for in today's market. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. 504-207-7600. Welcome back. Mortgage Gumbo with Dwayne Stein. MortgageGumbo.com. Rocking my, for those on the stream, compliments of T-shirt po' boy. Straight out of Araby T-shirt. Just like to remind everybody from God's country. All right, so let's talk about a second mortgage versus a HELOC. There's a difference. A HELOC, home equity line of credit. And I'm going to share a story. And let me ask you if this sort of sounds familiar, this situation. Right? 2019, 20, half of 21, through half of 22. Either bought your home or refinanced your home. You got that sub 4% rate. Maybe you consolidated. Maybe you just did a rate term refinance. Maybe you did some home improvements. And you thought, I'm set. I'm a bank robber without a gun. I am stealing with this rate in the 2s and 3s. Financially, I am set. And then what happens? Life. Life happens. That new vehicle that you had back in 1890, you need a new one now, right? Student loans. Wait, they didn't get waived, so I do have to pay them back. New roof, new AC, cost of living, credit card balances you're using because of cost of living, because of some of those repairs, general maintenance, just life happening. And going to the mailbox has now become stressful again. But the beauty of home ownership is, like we talked about last week, owning a home is an asset, not a debt. Buying a home is an asset. So you now go, all right, this is stressful going in the mailbox. Now I feel like I get something every day of the week, a new bill, a new statement. So let me kind of explain how we can help. And it's using that asset, your home, and taking advantage of the equity. And we don't have to touch that sub 4% mortgage. We don't have to touch that. But what you got to look at is, hey, do I do a second mortgage or a line of credit? So let me, for those who listen, understand, I refinance HELOCs all the time. They're the devil in disguise. People think, oh, I'm going to get a line of credit. I'll use it when I need it. And next thing you know, you're using it all the time. You're at your max, and you got a variable rate that you don't know what the payment is. And now what? Now, I'm not saying, hey, if you're disciplined out there and you got it, cool, great. But for most of us, and especially those who call me, who listen to the show, who coworkers, family members, who referred over, most of the time that fixed second is the way to go. So the difference, just to be safe, just to make sure I'm clear here, with a fixed rate second, you're going to get a lump sum. All of it up front, and you have fixed rate payments. You know what your payment's going to be over the term that you choose. Whereas a HELOC, it's a credit line. You draw from it. It's got a variable rate. It usually amortizes, and it's set up to where, hey, you get a checkbook or however you want to pull money out, and it's set up over a 10-year time frame, amortized out, so to speak. And then it's based on what the Fed funds rate. So imagine all these HELOCs, if the Fed does raise rates, what's going to happen? but it's unpredictable. And in my world, I don't like that. When I talk to clients, what is my pay? The biggest thing, hey, we had the Queen on a couple weeks ago. What is the biggest thing for homeowners that's affecting it? They don't like changes to their payment in the way of insurances and stuff like that, taxes. Hey, my payment went up. So what you have to understand is homeowners right now have over $17 trillion in equity. And a client this week that called me has 2.75. We're not touching that. But what we're doing is we're paying off the student loans, the credit card debt that has submounted up, and going to save this client $2,800. And it's only like a $95,000 loan. Because for most of you, hey, you want to maybe do some home improvements and stuff like that, but that's a throw-in. What's more important to you is, how in the world do I relieve some stress? And you're sitting on this incredible asset that's been working its tail off the last several years for you, your home, building equity and building your wealth. And you're walking into that grocery store and you're bragging about, I've got 2.75%. But life has happened. And these credit cards, these auto loans, right, that are now the average auto loans over $700. 1 out of 4 of you listening have a car note of over $1,000. So life has happened and you're struggling. And you want to know where is there relief? Well, let us take a look at doing a fixed rate second for you, to where we can get rid of all that debt for you. And we could free up that money. And do like we're doing for one of my clients, like I said this week, $2,800. Folks, that is that is net money back in your pocket. Go to your boss and say, hey, I want a $3,500 a month raise. So you can net out your $2,800, whatever your tax bracket is. That's what you busting your rear end, and that's the benefits of home ownership. Right now is that time. We get it that things are stressed out. Credit card rates, all these things are high. But knowing the difference on what you could take advantage of, and that's why a second mortgage being fixed, in my opinion, is the way to go. Now, if you're a business owner and you go, hey, I just want something to help me payroll when I need it, Gumbo Nation, that's a whole different ball game. But when people call and go, hey, I want to look at getting a line of credit, and it's my job to explain what that difference is. But, hey, I want to look at paying off some debt with a line of credit. Well, now you're paying off $30,000 in credit card debt and moving it over to a HELOC, which is now a gigantic credit card on your home because it's a variable rate. So it's knowing that difference, and let's have that conversation. We're being pretty aggressive with these things. Depending on your credit score, we're going up to 90% on some of this stuff. So let's alleviate that stress. Let's get you that relief that you deserve. Let's get you back to that warm and fuzzy of when you used to walk out to the mailbox and you felt good about things. Let's get you back to that. So let's have that conversation. But if you have to pick a fixed rate second, well, I don't want 30 years. All right, let's look at a 15-year for you. Do you want to save $2,800 or do you want to save $2,400? It's 6 one way, half a dozen another. But we've got to look at using that equity. That is your get out of jail card, right? Let's get you that relief. You've worked hard for that house. Let that house work for you. So that's why I like a fixed rate second over a HELOC all day long, because I see it, Gumbo Nation. In theory, a HELOC, hey, cool, I'll use it only when I need to. It burns holes in people's pockets. All right, don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein. Still to come on the other side of the break. Hey, sellers, we're going to let you know what homeowners, home buyers are looking for in blended rate. Just talk to you a little bit about, hey, I've got this low first rate, first mortgage. This second's a little bit higher, but I've got these credit cards. Explain what exactly is a blended rate so you can work through that and look at that. How do we make your money work smarter for you? Same debt, but let's move it around so less of your hard-earned money is going to pay it off. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. 504-207-7600. Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein. Hey, the home away from the show is mortgagegumbo.com. Always got somebody on standby, or just give us a call, 504-207-7600. I'm here for you. Go out. Tell one person about us this week. All right, so let's get into, you know what, let's knock out our weekly segment we like to call Rate Watch. All right, Rate Watch is brought to you this week by the Queen herself, TWFG. Give them a call, 985-951-2070, or go to mortgagegumbo.com, click on resources, and you can find them there. They are putting money back in your pocket. Insurance rates are falling here in the state of Louisiana. What? Unlike mortgage rates, insurance rates are falling. Let the Queen and her team see if they could put money back in your pocket. Call and ask about the private flood options versus having to do the national, the FEMA. Reach out, 985-951-2070. All right, 30-year this week, 6.66. It's the number of the beast. We don't like it, on 6.6. Up from 6.56, so about 10 basis points there. Don't like that. 15-year, 6.13. FHA, 6.18. Jumbo, 6.70. VA 6.19. That 10-year jumped from 4.43 last week to 4.516. A lot of this, or most of this, was all yesterday due to that heavy jobs report. So we'll keep an eye on rates because oil prices actually went down. So, but it was outweighed by that huge jobs number. So that kind of gives you an idea on what the market is looking at, right? If all this hiring's going on, like we said, it's going to be hard for feds to make moves. So, all right, let's talk about blended rate. And what I want you to think of when I'm talking blended rate, Gumbo Nation, is think about when you're running your bath water or your shower, right? You don't go all hot. You don't go all cold. What do you try to do? You try to find that perfect temperature. Now, I know some like it a little hotter, some like it a little colder, but you want to find that norm, right? What is that middle ground, so to speak? You compromise between the hot and the cold. Well, that's what I want you to think of when it comes to blended rate. And that example I gave you in the last segment talking about how a second mortgage, we're able to save somebody $2,800 a month. We lowered their blended rate from 17% to 6.5%. So think about all the interest savings alone by us getting rid of all that high interest debt on those credit cards, etc. And now having a much lower, by over 11%, blended rate. So that's what we're talking about. You're looking at, hey, my existing mortgage is at 3.5%. Great. But if you've got all these credit cards at 20+%, and what other loans you have, we put all that in and we can show you what that is as we're working through this to show you the amount of savings. You've worked hard for your home can work for you, but as importantly, that's money in your pocket. Cash is king. So if you're going to pay your bills every month, right? If you're going to pay them, and I don't believe anybody takes out a loan and says, I have no intentions of paying you back. Maybe I'm just naive. But if you're going to make your payments every month, why pay more to the institutions that lent you the money than you need to? Let's lower that blended rate for you, and what does that do? That keeps more money in your pocket. I mean, that $2,800, I showed the borrower, hey, save $1,500 a month, put another $1,000 towards your mortgage, and I showed him how to take, I think it was 11 years off of your mortgage. tens of thousands in interest. That's what a home wealth advisor like myself does for you. We don't just throw numbers out there and go, you want this. We show you what is the path, what are we trying to do here, what do we want to accomplish, and we work together as a team. So look, go find those blended rate calculator. You come to me, we have that. We'll put that in place for you. I can show you what that is as we're working through it. And why do I do that? Because the number one thing you want as a homeowner, as a home buyer, is the whys. And I'm going to make sure that you have that. I'm going to give you your whys on what we're doing and show you, not just tell you, I'm going to show you. So think of that. Think of blended rate again. You're running that bath water and you're looking for that better temperature, right? So let's find that middle ground. Because you're going to make those payments. Well, let's borrow money at a much cheaper and fairer price than what you're paying on some of these peaked out interest rates. All right. Tim from Lakeview. Bear with me here, Gumbo Nation. Lengthy question. Dwayne, love the show. Number one, do you do Florida loans? Secondly, my daughter is in nursing school and just got married. Her husband's job has them relocating to Florida, hence the question above. They asked me if I would consider co-signing for them. I know you're not a fan, but specifically, what does it mean for me regarding my responsibility? Great question, Tim. And thank you for being a fan. And number one, yes, I do handle Florida. But what we need to know is a little bit more about this situation. Because are you co-signing because you want to help them with affordability? Or is it because of credit? And I get this a lot. My credit's not good. I'm a 500 credit score, but I can get a co-signer. No, you can't. Because if you have two people on an application, you have to use the lowest middle score. So if you're a 500 and you get somebody with perfect credit at an 850 to co-sign for you, we have to use your score. So they can't co-sign. So I need you to keep that in mind. Now, why do I poo-poo on co-signers? Because in this situation, I'm going to assume it's for affordability, right? Daughter's in nursing school, relocating, new husband got a good job, don't want to pay a bunch of rent. But while she's in nursing school, we know income's going to be higher. So can you hook me up and co-sign to help out? Well, yeah, you can. But what you need to understand, co-signing, the first thing I would look at, Tim, and Gumbo Nation is the affordability. Can we do Bank of Mom and Dad instead? Can we help them with down payment maybe? Because once you co-sign, what Tim wants to know is, hey, what is his responsibility? Tim and Gumbo Nation, when you co-sign, it is your debt. Regardless if it's a house or car, and it is your debt, your responsibility. You now own this other home. It is now on your credit. So what does that do? Not only, hey, I know you're certain they're going to make payments, everybody's going to pay on time. But if they don't, it affects you. But even more importantly is, I get you want to do a good thing. And there's success stories out there. But there's more horror stories than success stories on this. And what I need you to understand is it becomes your debt. What that means is if now you want to move, if now you need to go buy something, does that affect your ratios? Does that affect your buying power? Because as we talk about all the time, life happens. So I get what you want to do. It makes sense what you want to do. I understand. But just know that, hey, it is your credit gets pulled. Guess what? Hey, I see you've got a mortgage with a mortgage Gumbo at this address. And I see you've got a mortgage with mortgage Gumbo in Florida. Yeah, well, I just co-signed for that. She makes the payments. Well, your name's on it. It's your responsibility. So keep that in mind. You're a non-owner occupant, or you're an owner occupant. I'm sorry, a non-occupied owner. Sorry. A little tongue-tied there. So great question, Tim. We'll chat about it. I'll reach out to you. We'll talk so we can find out a little bit more in detail. Well, look, a lot of times, another application this week, hey, my mom and dad are willing to sign. We don't need them. Hey, we just need them to help with the down payment. We don't need them to co-sign. So let's look at your situation, right? Don't get caught up on all these TikToks and all this stuff on doing this and doing that. Let's see where you stand first. Then we'll go start making decisions. And you just have the benefit of listening to me and working with me, someone who's in the top 1% loan officer in the entire country. So it's proven. We're not fly by night. We have the programs and to get you in the home and help you out. All right, don't go anywhere. Still on the other side of the break, sellers. I'm going to give you some heads up here. I'm going to tell you what home buyers are looking for, what we're seeing. A lot of it's probably you can imagine, but we're going to go over it anyway, just so you know. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, the home away from the show, MortgageGumbo.com. Just listen along for a little bit, Gumbo Nation. It's a great song. There you go. I know I'm bringing some times back right now. The cars. Come on, you remember that banging bass back in the day, rattling your fillings, blowing out your eardrums. Your mom yelling at you because you can't hear, and the neighbors are complaining because you got that thump in the trunk. Love it. All right, welcome back. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. Why do I do this show? This is why. Because in the middle of the show, when I get a picture from my buyer at their new house over in Baton Rouge saying, look at this view, would not be able to obtain this without all your help. Can't wait to drink coffee and be able to see my horses in the pasture, literally from almost every angle. Thank you so much for pushing through all the BS and headaches to get us here. That's part of the job. That's why I do it. And I tell people all the time, 1 + 1 = 2, but so does 4 - 2. And so many lenders stop at 1 + 1. All of you out there, I recognize that you don't come with red carpet and somebody throwing rose petals at your feet, like the queen of insurance. But are you working with somebody who knows, like this client, to get you how to get you across the finish line and help you obtain home ownership? These are the things that motivate me and keep me going. I love it. Love it. All right, sellers, which, by the way, if you need help, I've got a team over here at mortgagegumbo.com. Reach out or send an email to info@mortgagegumbo.com if you want to chat about me helping you get that home sold. We can help you get that home listed. Talk about all the great programs we've got when you do that with Mortgage Gumbo. So, some recent information from NAR, National Association of Realtors, Home Association of Builders. And here's what I could tell you, and we've been talking about this for years now. If somebody is buying right now where rates are a little bit elevated, they're seeing the benefit of home ownership, but their top priority, sellers, is they need to be able to, it needs to be turnkey. They want zero immediate renovations, so to speak, that need to be done. They don't want to have to visualize what it's going to be. Because we've already talked about homes aren't going down. Home prices are still, appreciation still on the rise. And why these interest rates are kind of stuck in purgatory a little bit, buyers are still wanting to buy. We see it. The volume is there. But they want to make sure there is zero
2 minutes
improvements. Do you have that flex room? Do you have that room that they can use as an office, a wink, wink workout room, which holds clothes? A future baby room, right? A guest room that can be transitioned. Do you have that? Outdoor living. People want that outdoor space. Especially now, people work from home. They want to be able to walk out of their house and feel like, hey, it's an extension of their home, but they're getting to breathe in some fresh air. And some quick tips that we tell our sellers and the things that we've seen and the properties that I've worked on. Man, smart home. Folks want smart home availability. Of course, they want the energy efficient air condition AC unit and all that. But you know what they want as importantly? Smart. The Ring doorbell, the smart locks. Does that AC have the Nest where it's smart? And these are cheap things as a seller that you could put in that's going to give a perception, it's going to look good, and it's going to show good. And I connect mine. It doesn't take some rocket scientist to do this. I put them in all my homes. Go out, have a great week, Gumbo Nation. It's summertime. Put a little sunscreen on. Enjoy the beach. Most importantly, go out at that water cooler and spread the word of MortgageGumbo.com. Till next week, Gumbo Nation, keep stirring.